Rick Santelli is standing by at the CME in Chicago with some breaking economic data that may move the markets around. Rick?
Yes, and Robinhood investors that are long might be happy about this one. Durable good orders coming out 3 times more than expected, almost 4. We're looking for a number up 0.5%, up 1.9%, so just shy of up 2%. This is the healthiest number since July when it was up close to 12%. So a nice number here. Now, remember, these are September preliminary orders, so they will get revised in a couple of weeks, give us our final number. If you take out transportation, I still don't see that data out yet. But capital goods orders, non-defense, ex-aircraft, a proxy for capital spending, out double expectations, up 1%, up 1%. That is solid. Now, ex-transportation is out, up 0.8, also double the 0.4 we were expecting. And finally, if we move from orders to shipments, up 0.3, that is the only number that's a bit on the light side at up 0.3%. And there are some subtle revisions. On headline, we went from up 0.5% on our final read for August to now only up 0.4, so 1/10 revision. But ex-transportation grew from 0.6 to 1.0. And capital goods orders, non-defense, ex-aircraft for their final number for August moved over 2% from 1.9 to 2.1. So if I paint this with a broad brush, it was definitely better than expected. I think durable goods is one of the spots in the economy that is more driven by issues regarding strong demand and shortages of supply, whether it's cars or washing machines. And this is going to be highlighted as we get further down towards the holidays. And, of course, we need to pay particularly close attention to all inventory levels. Joe, back to you.
All right, Rick, thanks. Steve Liesman joins us now with more muted response. Not much going on in equities. Steve, what do you make of it?
This is expected, but it does, you shouldn't fail to highlight that the durable goods sector of the economy has been one of those that has come back faster than many expected. Some of the economists that I've been reading suggest that it shows the difference with the 2009 downturn where capital seized up, where banks seized up. That is not the case this time, and it kind of shows the importance of keeping the banking system and the capital markets open and running so that companies can borrow money to invest. You had a huge downturn in April and in March, and that's come back strongly. We do have to kind of sort out the big down followed by the big up to understand what's going on. You have a couple challenged industries. You guys remember this was the big story economically, or two of the big stories economically before the COVID crisis was what was happening with Boeing and what was happening in the oil industry. I don't expect the oil industry to be coming back very strongly, though maybe it does a bit better than it had been doing. But Boeing has an opportunity to come back and add substantially to the overall economic data that we have here. So that's good news. Rick is absolutely right, by the way, that some of what you're seeing here, it could be better, pardon me, if the manufacturers can get the parts they need. There's still massive disruption in trade that we have to watch that does slow down and have an impact on production. So this is good news, but we'll have to see if there's yet better to come as we get past the disruption and the rebound from the COVID crisis. Joe?
Shepard Smith here. Thanks for watching CNBC on YouTube.